Welcome to Talk Tickers, where we break down the earnings calls that are really moving the markets. Today, we're digging into Alibaba's latest quarter, and let me tell you, it was a wild ride.
So let's dive right in. Alibaba's latest earnings report was a real head-scratcher. The stock shot up in the pre-market, looking great, only to completely reverse and fall into the red right after the bell. It left a lot of people asking, what is going on here? Was this a clear signal or just a lot of mixed noise? Well, to understand that initial confusion, you have to start with the numbers themselves. And frankly, they were all over the place. And you can see it right here, plain as day. It's a classic split decision. On one hand, you've got a beat on the bottom line, on earnings per share. Great. But on the other hand, you have a miss on the top line, on revenue. And that's really the core conflict we've got to unpack. Because what's hiding under these headline numbers are two absolutely massive bets that management is making on the future. So, to really get what's happening, we have to look past those headline figures and focus on two huge strategic pillars. And the first one is their ambition to flat out dominate in AI and the cloud. And you just have to listen to how CEO Eddie Wu is talking about this. He's not saying AI is an opportunity. He's framing it as the most significant opportunity for the entire tech sector over the next decade. For them, this isn't just another business line. This is the engine for their future growth. And, this isn't just talk. This strategy is already paying off. You can see their cloud revenue growth accelerated to 26% year over year. But the real story here is that this growth is being powered by AI, which has been growing at triple-digit rates for 8 straight quarters. That's 2 full years of absolutely explosive growth. It tells you this is real. Customers are buying in. And they are putting their money where their mouth is to keep this going. We're talking about a 3-year, 380 billion RMB investment plan just for their AI and cloud infrastructure. That is a staggering amount of capital they're putting to work. They are all in. Okay, so that's pillar 1. Now let's move to the second pillar, which is just as ambitious. This is their plan to create a single, comprehensive consumption platform for their billion-plus users. Essentially, to completely reimagine e-commerce as we know it. So what does that actually mean? Well, think about it like this. They're taking all their big consumer-facing businesses, Taobao, Tmall, their food delivery service Alibaba, even their travel platform Fliggy, and they're putting them all under one roof. And the engine at the very center of all of this is what they call quick commerce, using high-frequency, on-demand delivery to get you to use the whole system more often. And the results so far? Nothing short of explosive. I mean, get this. They launched this thing at the end of April. By August, that's just 4 months, their monthly active consumers had surged to 300 million people. They even hit a peak of 120 million orders in a single day. The scale here is just mind-boggling. And this isn't some side project. Management is guiding that they expect this quick commerce push to add an annualized incremental GMV, that's gross merchandise volume, so the total value of all the stuff sold, of 1 trillion RMB within the next 3 years. They are building a massive new business from the ground up. Now, of course, these two huge ambitions, dominating AI and reinventing consumption, they come at a price. And that price tag explains exactly why we saw that pressure on short-term profitability this quarter. Management is making a very, very deliberate trade-off here. They're pouring cash into the future. We're talking 38.6 billion RMB in capital expenditures for AI and cloud this quarter alone. In exchange for that investment, they accepted a 14% drop in adjusted EBITDA and a free cash flow outflow of almost 19 billion RMB. They're basically telling the market, we are sacrificing short-term profits to fund what we believe are historic long-term opportunities. So, putting all this together, where does that leave us as investors? Let's break down exactly what we need to be watching for on the next earnings call. Okay, so here are the key things to keep on your radar. Number 1, AI monetization. Can they turn that huge investment into actual profit? Number 2, the path to profitability for quick commerce. They've guided that they expect to cut those unit economic losses in half, so we need to see that happen. Of course, the health of the Chinese consumer is a huge macro factor. And then you'll want to watch their international business, which is getting really close to break even. And finally, whether they keep up their big share buyback program. So our call here at Talk Tickers is outperform. Look, Alibaba is in the middle of a massive, expensive, but what we see as an absolutely necessary strategic pivot. They're sacrificing profits today for what could be long-term dominance in the two most critical growth sectors for the next decade: AI and this new world of comprehensive consumption. The execution risk is definitely high, but the potential reward if they pull this off, it's even higher.
And of course, just a reminder, this is not financial advice.